Afternoon and welcome to the February crop production and WASDE briefings. My name is Lance Honig and I serve as acting chair of the Agricultural Statistics Board here at NASS. This briefing is for the Secretary of Agriculture and other policymakers at USDA to better understand the content and context of today's reports. We're very pleased to have Alexis Taylor, USDA's Undersecretary for Trade and Foreign Agricultural Affairs, join us as Secretary Designate today. We also welcome Dr. Seth Meyer, USDA's Chief Economist. I'd also like to express our appreciation to Mark Hudson from our Florida office, who came in to assist us with today's report, and he will be in here shortly as usual. But before I turn things over to our presenters, I do have a few notes for our live streaming audience. The crop production and WASDE reports are considered principal federal economic indicator reports. The Office of Management and Budget provides specific guidance on how these important reports are to be released. OMB statistical policy instructs policymaking officials to refrain from making public comment regarding the content of these reports within 1 hour of their release. Therefore, we will not be taking questions from the public during this briefing. Both NASS and World Board staff are available for phone and email questions, and NASS will host a social media event at 1 o'clock Eastern Time today. We strive to have everything presented at this briefing match the official record. However, should there be any discrepancy, always refer to the official published estimates. With that, I'll turn things over to Chris Hawthorne, Acting Chief of the NASS Crops Branch. Chris will be immediately followed by Dr. Mark Jekanowski, Chair of the World Ag Outlook Board. Chris.
Thanks, Lance, and good afternoon and welcome. Just got a few updates for you today. So we've got updated numbers for citrus and sugarcane. Those both will be just Florida data today. So we'll go ahead and start off today by going over where we got today's data. Starting with citrus, we conducted the objective measurement survey. That is also known as our size and drop survey, where we visited 1,444 groves down in Florida. January 10th through the 24th is the data collection on that. We also did our row count survey, where we observed 81,333 rows on January 25th and 26th to estimate the percent of fruit harvested to date. For sugarcane, we also did get some utilization data from the Florida Citrus Administrative Committee, which gives us the quantity of fruit packed or processed to date. For sugarcane, we contacted some mills in Florida for updates on the expected yield and acres. We'll get into the citrus numbers now. Again, this is only Florida reporting this month, but for all oranges, the estimate is 2.76 million tons. That's down 1.1% from the previous estimate, but up 11.1% from the previous season. Non-Valencia oranges at 1.85 million tons is down 1.7% from the previous estimate, but up 5.2% from the previous season. Valencia oranges at 912,000 tons are unchanged from the previous estimate, but up 25.6% from the previous season. As you can see on the chart on the lower right, the lowest production in the last 20 years happened last year. So we're up just slightly from last year's production. Grapefruit at 340,000 tons, also unchanged from the previous forecast, but up 6.4% from the previous estimate. Lemons, that was, there's no Florida estimate for lemons, so that is just carried forward from January, but it is down 25% from the previous season. Tangerines, we do have a Florida component, but that is unchanged from the previous estimate, down, excuse me, 6.7% from the previous season. Now getting into the sugarcane estimates, again, only changes to Florida, but harvested acres has changed slightly to 935,000 acres. That is up 0.5% from the previous season. Yield at 35.6 tons per acre is up 0.6% from the previous estimate, but down 4.6% from the previous season. And then production at 33.3 million tons is up 0.9% from the previous forecast, but down 4.1% from the previous season. Florida is expecting the second highest sugar and seed production on record, which was 2020. This next slide just indicates some of our upcoming reports. Next Tuesday, we're going to be releasing the highly anticipated 2022 Census of Agriculture. It's the most complete assessment of U.S. agriculture. The data will be published on February 13th at noon. Then we will have the crop values final estimates. That's a quick stats only release on February 16th. Farms and Land and Farms is also going to be released that day. February 23rd, we'll have the cattle on feed estimates. Also corn, soybean, sorghum county estimates that will be released on quick stats that day. February 26th, we have our crop values that we do annually. February 29th is our monthly ag prices. On March 1st, we have our care reports that's going to include our cotton systems, fats and oils, and grain crushings, but we also do our annual wrap up of cotton systems and our fats and oils as well. And then we'll be back in here on March 8th for our crop production report, cotton ginnings, and then our quick stats only release of rice county estimates. Just want to remind everybody about the USDA's Agricultural Outlook Forum over in Arlington, Virginia. That is the 100th anniversary of the start of that forum. A lot of great information will be presented. Make sure that you can register to attend in person or virtually. So we'll see you guys there. Also, reminder that we have the Stat Chat today. Mr. Lance Honig will be hosting that on X, and you can ask any questions you may have. So make sure that you sign on to that. And this last slide just shows where you can get to all of our data. And for any questions, you can email us or give us a call. So thank you guys. And if there's no questions, I'm going to turn it over to Dr. Martin Jackinell.
All right, thank you, Chris. That was quick. My presentation isn't going to be quite that quick, but what I hope to do is bring you up to speed on the global commodity outlook and what we did in this month's WASDE. As you know, as you just saw from Chris's presentation, we didn't get much of anything from NASS this morning, so no real changes to the domestic supply side of the balance sheets. That's normal February. We do have a focus this month on Brazil, soybeans in particular, that crop being harvested right now. Again, talk a little bit about rice in Sri Lanka, a little bit of a rebound in production there, and talk a bit about cotton in Australia, along with our routine information for all of the basic commodities. So let's start out with global wheat production. Wheat production adjusted a bit higher this month, second highest wheat production on record. And for the most part, all of the changes you see here, the January changes are just reflecting updated government data. So a little bit of an increase in Argentina there. That's reflecting AgMin data. European Union down a bit. That's mainly reduced production in Sweden. And Kazakhstan is final government data for there. Global wheat balance sheet. A few things to talk about here. Production we talked about, so supply is up a bit this month. Feed use, we pulled back, mainly reflecting lower feed use in Ukraine and Australia. Australia has seen improved pasture conditions, so a little bit less need for wheat feeding there. So lower feed use in Australia and Ukraine, offset by increased feed use in the EU. Total use up a bit there too. That's mostly India, increased use in India. Trade, exports, higher exports out of Ukraine, raised our Ukraine export forecast again, raised it 1 million tons to now it's at 15 million metric tons. Also higher exports out of Australia and Argentina, partially offset by lower exports from Brazil and United Kingdom. US balance sheet, not a whole lot here going on, as you can see, focused mainly on one new piece of data we got since the January WASDE, and that is the flour millings product report. Lowest wheat use for flour milling for the October-December quarter since the data has been reported, 2015, 16, whenever that started. So low food use there. Also exports, no change in total, but some offsets there. Hard red spring exports raised 5 million bushels, offset by lower, equally offset by lower exports of hard red winter. And no change on season average price. Global rice production, we'll talk just a little bit about Sri Lanka. That's the main change this month. Also a little bit of a reduction in Philippines as well, just reflecting some of the El Nino conditions affecting production there. But let's talk a bit about Sri Lanka, mainly because it's a fairly interesting story. They've gone through a lot over the past couple of years. So just for some background, this is the country of Sri Lanka. They have two main crops, about equally split between the Yala production period and the Maha production period, mostly irrigated. And as you can see, produced throughout most of the country. Rain this year, precipitation has been abundant, almost double normal, close to double the normal levels. But unlike, you see in some countries, unlike, for example, Pakistan last year or whatever, this isn't resulting in widespread flooding. Land here is able to accept this rainfall. So essentially the increased rainfall is a good thing, positive for the production prospects. And this year, we expect production to rebound back toward historic levels. Now, it's worth pointing out here as well, if you look back to 2021, this was a year production dipped pretty substantially for the country, and that was the result of them banning the use of chemical inputs, especially chemical fertilizers. So they saw a big yield hit that year. Took a couple of years to recover, but essentially we're now back toward normal production for Sri Lanka. Sri Lanka tries to be self-sufficient in rice. And they should be close to achieving that this year. So this is good news for Sri Lanka. Global rice supply and use. Couple changes here to discuss. Increase in beginning stocks. That's mainly higher stocks in Indonesia and Vietnam. Total use raised to a new record consumption, driven by higher consumption primarily in Indonesia, Saudi Arabia, and the Philippines. Trade up a bit, and that is mainly higher exports out of the US, which I'll talk about next slide, and Pakistan. So the US, focus of the US balance sheet this month is all on trade. Raised our import forecast again. We've been raising that pretty consistently for quite some time now, and it essentially just reflects strong demand for long grain aromatic rice. In this case, we've seen pretty strong import shipments of Thai jasmine rice in particular. So that's boosting that import forecast. Exports, on the other hand, we also raised exports, saw some pretty good export sales and shipments, especially of rust. This is raised based entirely on long grain, mostly rough rice to Western Hemisphere destinations. No change on season average price, and with those changes in the imports and exports, we tighten up ending stocks just a bit, 1 million hundredweight. Moving into corn production, global corn production. I put up the back year here, 2022, 2023, because we made an adjustment to our Argentina production forecast Raised that crop just based on observed use. You'll recall Argentina, and they suffered drought. It was that crop was damaged. It was small, but turning out just based on what they're shipping and whatnot, the crop was probably a little bit bigger than we had initially expected. So we raised that 1 million tons. And then now focused on the new crop year. Brazil production, we reduced 3 million tons, and that's a reduction in area. That's a crop that's the safrinha crop currently being planted, planting underway, low prices, providing less of an incentive to increase there. So that's an area adjustment lower. Mexico reduced production there, 500,000 tons, and that's also an area reduction. And as you probably know, Mexico has been suffering drought, low reservoir levels. So that's going to be reflected in lower production and lower area in Mexico. Serbia, the rest of the data there is basically official data. Serbia down a bit, India up a bit, all based on recent official data from those countries. Global balance sheet, beginning stocks, various small changes across several countries, but production we talked about lower. That's mainly reflecting that reduction in Brazil, area reduction in Brazil. Feed use down 2 million tons this month, adjusted lower, reflecting a couple of countries. Lower feed use in Pakistan, where they've been increasing their exports, corn exports, pretty substantially recently. Also lower feed use in Ukraine, Mexico, and the EU. Ukraine, lower feed use internally, they're exporting more as well. So we increased our Ukraine corn export forecast by 2 million tons. Now it's at 23 million. And Pakistan, we raised exports there as well, but that is more than offset by reduced exports by Brazil, India, and Serbia. Ending stocks tightening up a bit. That's mainly lower stocks in Ukraine and Brazil. Brazil, of course, reflecting the smaller crop. U.S. corn balance sheet. Only change we made here this month is on food, seed, and industrial use, and that's lower corn use for glucose and dextrose based on some industry data, indicated usage by the processing industry. So with that lower usage, that just goes straight into ending stocks raised by the equal amount, 10 million bushels. No change in market price this month. Moving into soybeans, here again, I put up the back year, last year's production, because made an important change to Brazil, raised Brazil's back year crop again this month, raised it by 2 million tons to another record, 162 million tons. And again, this is based on not production data, but the use data. I mean, exports and crush. Given what they're exporting and crushing, that crop just had to be big. There we go. Crop had to be bigger than what was initially reported. So therefore we raised it. And importantly, we raised area as well. So it's an area and a yield increase. Prior to this, we've been focusing just on yield, but at some point, it has to be more than just yield. So we raised area as well. Carried some of that area increase into the new year, to the current year. But that is more than offset by a lower yield. So production for Brazil, we lowered for the new crop year by 1 million tons. Also not listed on the in the list of countries there, but we also increased Bolivia's production. So let's talk just a little bit about Brazil soybeans. Typical chart here of where soybeans are produced in Brazil. Two main regions, the tropical region, dependent on that monsoon rainfall and the timeliness of that, and then the subtropical areas to the south. And you'll recall, or from watching the news, that the rainy season got off to a slow start in the main tropical production region. So this is Mato Grosso. Rainy season started slow, and it still, remains, relatively lackluster. Slow start, not a big, rapid pickup to the rains as we might have expected. So that's that's weighing on production. It's also been hot. That hot weather has continued since I was up here last month. Conditions remained hot. So that is impacting yield there. Then when we go a little bit further south, Paraná, you'll recall we talked about this last month as well. Got off to a great start precipitation wise early in the season, and then the rains just really started to slow down. And it's been, even since the January lockup, had, some good rains, but then again, not consistent and pretty slow recently. That's impacting yield. So those less than ideal weather conditions are affecting yield, and that's why we reduced production this month. Still second highest on record, but down from where we were in January. Global balance sheet. We talked about supply, beginning stocks up. That mainly reflects that larger crop in Brazil on the old crop, increasing, carrying through into higher supplies, more than offsetting the reduction in production for the new crop. Crush, small changes there, small offsetting changes across many countries. Trade, global trade, soybean trade down a bit this month. Worth noting, so lower exports out of the U.S. For the October-January period, we saw record exports out of Brazil. Just worth noting, I'll talk about that a little bit in my next slide for the U.S. as well. Ending stocks up, and that is mainly in the U.S. and Brazil. So U.S. Supply and demand, again, to focus here mainly on the trade side of the balance sheet, exports in particular. Pulled back our export forecast 35 million bushels, just reflecting pace to date, and that strong competition from South American supplies and the exports coming out of Brazil in particular. Ending stocks up, reflecting that, lower export shipments, and in adjusted season average price lower by 10 cents a bushel, reflecting recent price weakness and just those higher stocks. Cotton production. We'll talk about Australia. That's the main change this year, this month, in terms of global production. Essentially what happened here, Australia, we overestimated the amount of irrigated production in cotton. So higher dry land production, lower irrigated production, resulting overall in a little bit of a decrease in total production. So real quick, these are the primary areas of Australia where cotton is produced, and most of it is irrigated, but there is also a non-trivial dry land component, dry land area within Australia. And when the season started out, the planting season started out, things were very dry in Australia, and we had expected that to continue. It's an El Nino year. You expect relatively dry conditions in Australia, but it didn't quite pan out that way because later, let me go back. Because toward October into January, got pretty decent rains late in the planting season. Shows up here as well on the rainfall trace. Very dry early, and then we got a real burst of rain right toward the end of that planting window, and that apparently brought in a lot of dry land production. So higher, typically dry land production, lower yielding than irrigated. So even with that increase in dry land area, total production still down, just reflecting that difference in the mix between irrigated and dry land. So global cotton balance sheet. Few things to discuss here worth noting. We didn't change our consumption forecast this month, but we did raise China consumption, offset by some lower consumption in other countries like Turkey and Mexico. So despite the difficult economy in China, difficult economic conditions, textile demand still seems relatively strong. So that remains positive. Trade, again, we raised China's imports, lower, offset by lower imports to other countries, but China generally is still looking relatively strong. Ending stocks down, and that's lower ending stocks in the US and a few other countries as well. So in the US balance sheet, again, the focus mainly this month is on trade, changes to our export forecast. Strong recent shipment and sales data for US cotton, including sales and shipments to China. So raised our export forecast 200,000 bales. Also reduced our domestic mill use again this month. You'll remember a couple months ago we took a pretty big cut to that, lowered it again this month. So we're back at again at 1870 levels or so by comparison. And when it all balances out with some residual there, ending stocks tightening up, cotton stocks tightening up. Raised our price forecast by a penny a pound, mainly reflecting strength in the futures markets, which is expected to translate into stronger grower prices as well. So let's talk a little bit about sugar. Again, as I've done for the past couple months, I think we're going to start with Mexico because it's the developments in Mexico are really what's driving the US balance sheet. And this is, again, kind of a continuation of a story that I've given the past few months. Production in Mexico is looking really poor. Harvest is underway. About 25% of the crop is harvested right now. They've suffered drought conditions and low recovery, poor yields. So the production is just coming in well below earlier expectations. That's tightening up Brazil's supplies, of course. That reduces their available supplies to export, including, of course, to the US, most of their exports come to the US. Low pole sugar in production in Mexico is now estimated at about 10.5%. That's down from 11.8% last month. So that, of course, all comes to the US, but bottom line, Mexico just has fewer supplies to ship to the US. Now, on the other hand, they still need to supply their own market. So imports to Mexico are up again this month, while exports to the US are down, ending their targeted ending stocks level essentially unchanged. So what that means for the US, lower supplies, lower imports from Mexico to the US, tightening up the US supply situation. At the same time, US production also adjusted a bit lower, mainly just at this point we're focused mostly on processor observations. They're looking at the quality of the beet pile in North Dakota and Red River Valley, et cetera, and the yields coming in, cane yields coming in from the southern production region. So those are actually, so cane is up a bit, but more than offset by a reduction in beet production based on processor data. So supplies tightening up, high tier imports raised again this month. And this is, this is mainly reflecting observed. This isn't, it is a forecast, but it's a forecast based on what we're observing coming in, both raw and refined sugar. And just worth noting, if you combine both the US high tier imports and Mexico's high tier imports, we're looking at over 1.3 million short tons coming in at the high tier. So that's just reflecting the tightness of supply, sugar supply in this North American market, and the market pulling that sugar in. The rest of the balance sheet, not a lot. Domestic deliveries, we pulled down 75,000 tons, mainly reflecting relatively low delivery data in December, generally reflecting lower direct consumption imports. So stocks to use ratio as it stands now, 14.2%. That's actually up a bit from last month. All right, let's move into livestock, meat and livestock. A few things to talk about here. Focused, of course, on 2024. We have the 2023 data essentially finalized at this point, incorporated all the December data into that. So we'll focus on the new crop year, new calendar year for livestock. Beef production raised 80 million pounds. So, you know, of course, the main piece of data we're focused on this month is the cattle report, came out January 31st. You know, one of the headline numbers from that was a tightening cattle supplies, but one of the other factors within that report indicated a, smaller than expected decline in cattle outside of feedlots. So what we're expecting here, more placements in feedlots in the first half of the year. That's going to come out as steak in the second half of the year. So that's where this production increase is coming from there. Pork production reduced this month, just reflecting slaughter pace, lower slaughter pace for pork. Broiler production up a bit. That is primarily reflecting heavier weights. Turkey production lower. Couple things there. The continued impact of past HPAI outbreaks on production, and also just the fact that turkey prices have been pretty unfavorable. So producers will, are likely trying to pull back production a bit, just because of the reduced profitability. Speaking of prices, steer prices, we raised $1.75 per hundredweight, reflecting tight cattle supplies and continued strong beef demand. Hog prices up as well, again, also reflecting relatively tight supplies and strong demand, strong pork cutout for a wholesale pork demand. Broiler prices raised 1.5 cents per pound this month. That's all in the first half, reflecting continued strength from last year. And turkey prices pulled back again, pretty strong reduction, especially if you look at it year over year, just weak demand for turkeys. Meat trade, I put up 2023 there just because, again, this is the final, we incorporated the final data from December of 2023. Data just came in yesterday, so those are fresh estimates, hot off the press, as you might say, but essentially puts 2023 to bed at this point in terms of meat trade. For 2024, pork exports we raised, and that is mainly reflecting many of the key markets, including strong imports by China and Mexico. Broiler exports down this month, reflecting weaker demand from various price sensitive markets. No one country there really driving that change. And turkey exports, we raised a little bit, 15 million pounds, and that, shouldn't be too surprising given the lower prices, becoming more competitive on export markets. The other big big change here worth noting, strong increase in beef imports, high US beef prices, tight US supplies, strong demand for processing grade beef. Most of this is coming from Australia, as well as some from Brazil, but tight supplies, high US prices, that's going to bring in those imports. Finish things up here with dairy. Again, I put up 2023 to point out that late last year, we saw a kind of an unexpectedly strong rise in domestic use late last year, which then we are carrying through into the new calendar year, into 2024. So strong domestic demand, high international prices, reducing imports, both on a fat basis and skim solids basis. Strong domestic demand also reducing export prospects to some degree, especially in these markets that traditionally are highly export oriented, like skim solids and whatnot. But so we pulled back that export forecast. But again, this is mainly driven by that strong domestic use, strong domestic demand that we're seeing for dairy products right now. And that strong demand is also reflected in price strength. So higher prices, prices adjusted higher for all the products, all the main products this month, reflecting again that strong domestic demand and relatively tight international supplies as well, supporting prices, which translates into higher class prices and nearly $1 increase in the all milk price, 95 cents per hundredweight. And that is all I have with regard to the high points of the WASDE this month. Hope I gave you some good insights into what's behind these numbers. And to all those who tuned in online, thank you for attending. And we will see you back here in March. And also hope to see you at the Ag Outlook Forum next week. And with that, I will wrap it up.